According to the comments made by an excess official regarding the Ripple ruling, the Howey test was not intended to address secondary market sales. Daniel Michael, a former member of the Securities and Exchange Commission, along with a group of legal experts, offered their commentary on the Ripple verdict. They emphasized that the Howey test was not intended to address trades that take place in the secondary market between anonymous buyers and sellers. Recently, Daniel Michael, who had previously served as the head of the Complex Financial Instruments Unit of the SEC's Enforcement Division, offered his thoughts on the case that the agency is pursuing against Ripple. The Howey company is not suited to sales on the secondary market. Michael and a group of legal experts remarked in response to the verdict. The facts in the Ripple case, according to the authors, make it difficult to make any kind of determination on whether or not there is a joint venture between traders on the secondary market and the initial sellers. According to the analysts, the Howey test is considered to be satisfied when there is an investment of money in a common company, and it is anticipated that benefits would be received from the efforts of other individuals. In addition, they contended that the Ripple verdict makes it significantly more difficult to determine whether dealers in the secondary market may fairly anticipate making a profit from the efforts of the first sellers with whom they have no kind of relationship. It should be recalled that the court that is in charge of the Ripple case released the widely awaited verdict regarding the summary judgment on July 13, 2023. The Howey test was applied to the facts of the case, and Judge Analista Torres came to the conclusion that Ripple's previous institutional sales of XRP constituted an investment contract. On the other hand, programmatic sales on secondary markets and other distributions did not meet the criteria for an investment contract. Because the SEC was dissatisfied with the verdict, it made an attempt to certify an interlocutory appeal in order to contest the decision that the court had made regarding Ripple's sales of XRP on the secondary market. The plea, however, was denied by Judge Torres, who stated that the verdict that was handed down on July 13 did not provide a dominant matter of law for which there were sufficient grounds for a difference of opinion. There was no intention for Howey to deal with sales on the secondary market. In his statement, Michael, who joined the SEC in 2010, argued that it is not surprising that the court in the Ripple case addressed the problem of secondary market trading by relying on cases that involve direct sales between buyers and issuers. Those who are knowledgeable in the law have stated that the Howey test was not intended to handle transactions that take place on the secondary market between anonymous buyers and sellers who do not involve the issuer or the asset. Despite the fact that the SEC asserts that the Howey test is adaptable, the legal experts noted that the security test that has been in place for a long time is not without its limits. They went on to say that if the test was applied to situations that was not intended to address, then potentially testing those limitations would be taking place. In addition, the analysts provided a few examples of how the Howey test was applied in the context of secondary market trading. When Michael and his colleagues were working on the case of Hocking versus Du Bois, they brought up the fact that the Ninth Circuit Court of Appeals had determined that the characteristics of an asset do not on their own constitute an investment contract. Nevertheless, the promotion of the asset and the statements made about it at the time of sale are significant aspects to take into consideration when determining whether or not the asset will be considered a security. The legal analyst made the observation that these instances lend credence to the idea that the Securities and Exchange Commission appears to be extending the Howey test into uncharted seas. The corrective path the XRP takes could result in a rally of either 85 or 120%. Alan Santana, a well-known market expert, recently analyzed the possible price movements of XR, predicting that it might have a rise of between 85 and 120%, depending on the corrective path it takes. The analysts investigated two different correction scenarios for XRP, emphasizing the likelihood of huge rise in the cryptocurrency. It was pointed out by him that the current strong trend in wave would be the primary factors that would lead to higher pricing. In his study, Santana made the observation that an adverse scenario for XRP is not likely to go beyond a significant, sudden, or unexpected decline. Despite the fact that he acknowledged the volatility of cryptocurrency markets, he pointed out that XRP has historically demonstrated resiliency, frequently breaking from standard patterns and defying market norms. It is noteworthy that the rise of XRP has slowed down over the past week, despite the fact that Bitcoin and a few other assets have recorded quite significant price increases. Members of the community have expressed their concerns regarding this tendency, although market observers continue to maintain a positive outlook. According to Santana, the wider picture consists of a mix of a bullish trend and a bullish wave, both of which would position XRP for higher pricing due to the confluence of these two indicators. Santana suggested that the current position of the market implies a pattern of lower prices leading to eventual greater highs. This is despite the fact that there is the possibility of a normal retracement occurring. Particularly noteworthy is the fact that the analyst mentioned that the volume of trades involving XRP has decreased since July, when it reached a peak of more than $10 billion following the verdict on July 13. XRP may experience a rise of either 85 or 120%. Santana examined the 6-month view for XRP, which suggested that the cryptocurrency may face a challenge to the peak that was reached in July, which was between 73 cents. XRP might perhaps rise to trade around these prices if there is a strong positive bias. This would indicate a potential jump of 50% or more, specifically an increase of 85 to 120% depending on the retracement route that it takes. Santana presents 2 different retracement courses that may be taken. The first version, which is shown in blue, predicts that the price of XRP would fall to the 51 cents zone before seeing an increase of 85% from its current level. On the other hand, the second correction path, which is depicted in red, has the potential to bring XRP down to the 43 cents zone, followed by a subsequent surge of 120 from the current price. Santana believes that previous calculations imply a probable aim of approximately $5, taking into consideration the potential impact over the long run. He does, however, point out that it is difficult to forecast the cryptocurrency markets and that there is the possibility of unanticipated developments, particularly when considering the context of a supercycle. Meanwhile, in the short term, the price of XRP has climbed by 1.73% over the course of the past 24 hours, reaching 221 cents at the moment. An increase in demand can be inferred from the fact that the 24-hour trade volume of the asset has increased by 42%. Medico, which is owned by Ripple, has recently garnered a lot of attention for forging agreements with well-known companies in order to broaden its product offerings. This comes at a time when the competition for institutional adoption of crypto assets is heating up. The news that Medico has worked with the world's largest technology company to develop a new offline crypto storage solution was announced on Tuesday, marking yet another victory for the company. The purpose of the new solution, which is known as IBOM Hyper Protect Offline Signing Orchestrator, is to make the process of interfacing with digital assets that are stored in cold storage somewhat more straightforward. IBOM asserts that the use of OSO reduces the requirement for manual operations during the process of relocating assets from cold storage. In order to facilitate the transfer of cryptocurrency from cold storage, the solution incorporates a policy engine that enables safe communication between the various systems involved. As an example, Medico will install the technology in order to make it possible for its institutional customers to transfer assets from the Medico Harmonized Cold Vault to the Medico Harmonized Core, which is responsible for receiving requests for transaction signature.